Great to have you here with us this morning. All right, if there's any big takeaway that you were able to really kind of get from this shareholder meeting, what really stuck out to you?
Well, thanks for having me on. I think there's a couple of things. One being that the board is very focused on establishing a succession plan for Bob Iger. Two, Mr. Iger made a clear focus, I think, on transitioning the business towards its core franchises. And then just really reiterating the point that, Disney is sort of key to the state of Florida and it's going to put a lot of investment dollars into the state and their theme park business. Which has done really well for them over the years.
And let's just delve into that theme park business. Any additional commentary with regard to that? Because Florida, of course, takes a front stage in this when we think about the theme parks for Disney. But in fact, they have them around the world, and that has been a centerpiece, kind of a pillar of their business in the past.
Yeah, absolutely. I mean, I think the new comment that Bob Iger spoke about yesterday was that Disney would spend $17 billion over the next 10 years building out theme parks. Some of the data points that I thought were mentioned were a modest positive in that, Walt Disney World generates 50 million visitors this year and 8 million internationally. And I think where there's room to go is that international can continue to come back. That was a big thing. I mean, those parks are very profitable ever since Disney reopened them from the pandemic. They've been operating very efficiently and they generate, the vast majority of the company's profitability.
Okay, and so for the other spaces and around the world that Disney is going to want to operate, it's not, of course, just the parks experience. It's how they can get the digital experience that they've been able to drive into those regions as well successfully. Were they able to add any more color about that and where they're seeing even more international pickup on their streaming side of the business even?
We really didn't hear a whole lot more about the Disney streaming business. From our perspective, Disney's core franchises generate vast amount of interest from consumers all across the globe. I think if we ask consumers in just about every country, they have a favorite Disney character. Mm-hmm. And that really is what drives our view on Disney. We think streaming is going to be a global distribution game and Disney, from that perspective, should do really, really well.
And how does this parlay into the studios business, that vertical, and the release schedule for the upcoming years?
Well, I think the new announcement yesterday was that Moana would be coming back from a live action standpoint. Disney has ultimately a pretty wide breadth of content. And one of the things that I think has frustrated shareholders over the past couple of years is just that the cadence of that release slate is generally slow. So, we're looking for Disney and Bob Iger to come back and put a little bit of new spark behind that.
Now, the different thing going forward is how ESPN is going to be reported for. What detail, what color did they provide on that? And is there any more indication for how investors should be looking at this going forward?
Disney didn't really provide a lot of detail in terms of how ESPN will look. One of the things that we will be getting from Disney over the next couple of quarters is new segment disclosures, which will show the profitability of ESPN on a standalone basis. And we're really looking forward to that. From our perspective, the linear TV business is challenged. In the U.S., subscriber losses are in the 6-7% range. And we don't really see anything that's going to change that in the near term. However, as we look at it, sports and live news are the two really content genres that are going to do well in a streaming business. And obviously, ESPN is heavily focused or 100% focused on sports. So we think Disney can outperform some of their peers.
We got time for another, and I'll give you the floor. Anything we didn't catch on that you'd like to touch on right now?
I think a lot of the pushback from shareholders was appropriate, along the lines of Disney's social and political standings. We do have a change in management, right? Bob Chapek did not leave the best taste in shareholders' mouth after, he left. With Mr. Iger coming back, I think there's reason to be optimistic.
And that optimism, I mean, does that translate into profitability? Is that a shoring up of margins that investors can expect now with Iger reassuming and considering all of the different pleas, or not even pleas, demands that some of the more vocal activists had put forward towards Disney as well?
Yeah, well, I think the core business in itself is going to continue to grow from a revenue, from an operating income standpoint, and profits should improve, and primarily because we're going to get past the peak losses in the streaming business. I think what's added some optimism too is, this is a business that's going through a phase of restructuring. Disney's announced that they'll be eliminating 7,000 jobs. And as I look at Disney, in my cable media telecom coverage list, Disney is by far and away the fastest growing company that we cover and that we think will be growing over the next 3 years.